In 2019, WeWork was valued at $47 billion. It was bigger than Ford, bigger than Twitter, bigger than many banks. Just months later, it was worth almost nothing. The CEO was fired, the IPO collapsed, and one of the biggest investors in the world lost billions. So how did a company that rented office space convince the world it was a tech revolution? And how did it implode so fast? This is the rise and fall of WeWork. WeWork was founded in 2010 by Adam Neumann. The idea sounded simple. Rent large office spaces, redesign them, sublease them to startups and freelancers. But Neumann didn't sell it as real estate. He sold it as a movement, a community, a technology platform that elevates the world's consciousness. Investors loved it because tech companies get massive valuations. Real estate companies don't. And Neumann positioned WeWork as the future of work. The timing was perfect. Startups were booming. Freelancers were increasing. Millennials wanted flexibility. By 2014, WeWork was expanding globally. By 2017, it was in over 20 countries. By 2019, it had 500+ locations. Revenue was exploding, but so were losses. The turning point came when SoftBank invested. SoftBank's vision fund, led by Masayoshi Son, believed WeWork could become the Amazon of office space. They poured in over $10 billion. This is where things went crazy. Valuation jumped from $20 billion to $30 billion to $47 billion. But here's the problem. WeWork signed long-term leases, sometimes 10 to 20 years, but rented desks on short-term contracts. If members left, WeWork still had to pay landlords. It was a fragile model disguised as innovation. And yet, investors kept funding it. Why? Because growth was explosive. Revenue in 2018, $1.8 billion. Losses that same year, $1.9 billion. Then came the IPO filing in 2019, and everything changed. When companies go public, they must reveal everything. And what investors saw shocked them. WeWork wasn't a tech company. It was a heavily leveraged real estate company. The S-1 filing revealed massive losses, confusing financial metrics, huge personal control by Adam Neumann, self-dealing transactions. Neumann had bought buildings personally and leased them back to WeWork, trademarked the word "we," and sold it to the company, taken hundreds of millions in loans against his shares. Investors began asking, is this innovation or is this reckless growth funded by cheap money? Confidence collapsed. Within weeks, valuation dropped from $47 billion to under $10 billion. The IPO was canceled. Adam Neumann was forced to resign. SoftBank had to step in and rescue the company. Neumann walked away with over $1 billion in exit compensation. Employees lost jobs. Early investors lost billions. Public investors never even got a chance to buy in. And the tech unicorn narrative vanished overnight. By 2023, WeWork filed for bankruptcy, from $47 billion to effectively zero. It wasn't just bad leadership. It was 3 structural mistakes. 1. Financial mismatch, long-term liabilities, short-term revenue. This is dangerous in any downturn. 2. Fake tech narrative. Tech multiples were applied to a real estate business. When scrutiny came, valuation corrected violently. 3. Growth over fundamentals. They optimized for valuation, not profitability. When funding dried up, the model collapsed. WeWork wasn't a fraud. It was a company built for endless capital in a world that suddenly demanded discipline. Here's what entrepreneurs and investors should learn. Story can raise billions, but numbers must sustain it. 2. Growth without unit economics is a ticking time bomb. 3. Governance matters more than charisma. 4. Market conditions can expose weak models instantly. 5. If your business only works in perfect conditions, it's not strong. WeWork didn't fail because the idea was terrible. Flexible office space still exists today. It failed because hype ran faster than fundamentals. And when reality caught up, there was nothing underneath the valuation. The real question is, how many companies today are repeating the same mistake? How many startups are raising billions, burning cash, and calling it innovation? And when the money stops, who's next? Make sure you subscribe, like this video if you found it valuable, share it with someone building a business, and I'll see you in the next case study.